if you do one thing 10,000 times, it's always better than doing 10,000 different things only one time. Mastery comes from doing the same thing over and over again, learning from the mistakes that you will make along the way, and always becoming better. So if you only master one good strategy, that is all you need to make a living from trading. Just one highly profitable strategy will make you a consistent profitable trader if you are disciplined enough to put in the effort. So in this video, I am going to give you that one strategy that you need to become a full-time profitable Forex trader. Perhaps it is the most simplest Forex strategy that you are ever going to learn, and it works around 80% of the time, meaning it has a winning percentage of more than 80%. And our goal by using this strategy is to make around 20 pips every single day very easily, and that is all what we need to make living from trading, just 20 pips. Now I have given this strategy a name, trend continuation strategy. So let's dive into today's video and learn how we can use it to trade Forex or crypto or indices to make profits every single day. Now for this strategy, we are always going to use 15-minute time frame because it works the best on a 15-minute time frame. I highly recommend only using this strategy on a 15-minute time frame and not going lower than 15 minutes or higher than 15 minutes. Now for this particular example, I will be using Euro US dollar chart, but it works on every single chart, and you can also trade gold, crypto and indices as well. So what are the ingredients of this strategy? What do we need in order to buy and sell, in order to make 20 pips easily by using this strategy? The first thing that we are going to need is a trend. We need to identify the higher highs and higher lows and lower highs. We are going to identify the highs and lows of the market on our 15-minute time frame. Once we identify our highs and lows, we need to identify the break of support and resistance, and we must be looking at the key support and resistance level. And what is a key support and resistance level? Any support or resistance that keeps the market at that level, that does not let market break it couple of times, is considered to be the key support and resistance. I will show you the example in a moment. So the second thing is we need to identify the break of key support and resistance, and for the last thing we are going to use two indicators. Both of them are exponential moving average. For our first exponential moving average, we will use 50 length, and for our second exponential moving average, we will use 200 length. So these are the three things we need to master this strategy. We are going to identify highs and lows of the market. We will identify where the break of support and resistance happened, and then we will also use 50 exponential moving average and 200 exponential moving average to confirm whether we have the right trend, the real trend or not. So now let's add our indicators from here. We're going to type EMA and we will double click moving average exponential. For our first EMA, we will use 50 length, and for our second EMA, we will add 200 length, and we will also change the color to orange. So now that we have understood the basics, the fundamentals of this strategy, so now let's move on to some real examples, and I am going to show you how to identify the highs and lows, how to identify the break of support and resistance structure, and then how to use both exponential moving average not only to confirm our trend but also to help us find the trade opportunities. So here is our first example for the trade. We can see that from this level right here, we made a very strong movement to the upside and we created this higher high area. When we created this higher high, look what we did. We broke this level of resistance which held the market couple of times before, once, twice and three times. And when we broke it, we have broken the key support and resistance level. In this case, we broke the resistance level to the upside and we created this higher high. So we have identified our trend. It's very easy to do that. We just need a one big strong movement to the upside in case of buy example, and that big upside movement should also break the previous big resistance level which was right here, and we have to create a higher high. So once we have done that, we will confirm it with our exponential moving averages, the 50 EMA and 200 EMA. Now as you can see that both our EMAs, when we broke to the upside from here, we were also going up, and 50 EMA was above 200 exponential moving average, which is the compulsory thing. If we want to be in the buy, we need 50 EMA to be above than 200 EMA, and the trend, the movement of the 200 EMA should be towards the above side like we have here. So now we have identified the higher high area, we have identified the break of resistance area, we have both our exponential moving averages telling us that yes, we are in the uptrend. So the next thing is we are going to wait for the pullback towards that level of support and resistance, whichever we will break. In this case, we broke the strong resistance level. So we are going to wait until the market comes towards this area with some sort of a pullback, and it should also then create couple of rejections once we will retest this area and become a support. And the most important thing, the market has to stay above both our exponential moving average when we will come to test this level of resistance. So the market, after creating a higher high here, we made a pullback to the downside, and it was a very strong pullback. Now when we made a pullback, look what we did. 200 EMA was down, that is great, but 50 EMA, market crossed 50 EMA to the downside. So this pullback, would you say that we need to buy from here? Absolutely not, because we are not above both our exponential moving averages. The other thing is that we have not yet touched our 200 EMA, alright? So what happened, that after that market, it made a movement to the upside again, but it could not make a higher high. So when it could not make a higher high, that is a good thing for us, because now the market will come back again to retest this level of resistance, and we might get a trade opportunity. So the market, it came towards this level and it came down with a lot of struggle. There were sellers movement, then buyers, sellers, then buyers, then sellers, then the buyers came up. So when the buyers came up after this pullback, what we did, we retested that level of resistance right here. We made a support and there was a lot of rejections. We got rejected once, we got rejected twice, we got rejected 3 times, and then we tried to go lower than both our exponential moving averages. We touched our 200 EMA, but we failed to go down. We got rejected from that 200 exponential moving average as well, and the market, it went up. So when it went up, we also went above our 50 exponential moving average, which is a signal for us to take the entry, because now everything lines up. We have our uptrend, we have break of resistance, we have a pullback, both our exponential moving average holding the market to the upside. Market was unable to cross that level, and after the rejections, multiple rejections, when we created this support, retested that level of resistance, market, it also went upside to the 50 EMA once we got rejected to go down from 200 EMA. So anywhere we place our trade here, right after we got back inside that 50 exponential moving average, we place our stop loss just below that 200 EMA, and our target, it will be a 20 pips target. Right here is a very nice trade opportunity. Now we can also hold the trade longer if you want, but I only recommend doing that once you have already understood the strategy, once you have mastered it, and we can hold that trade towards that higher high area which we recently made. But I recommend that as we are expecting to make profits every single day, then it's better that we only target 20 pips. So that is our trade opportunity right here. Now let's move on to another example so you can understand it better. Now here you can see again that we made a very strong movement to the upside. We made this level of higher high here, and when we made this higher high, 50 exponential moving average also crossed above 200 exponential moving average, and both the moving averages were going for the upside. So we know that we have confirmed our higher high sequence, and we just need to wait for the pullback. Pullback should come towards that level of 200 EMA, and there should also be a support and resistance from where we can expect a reversal. So we had this level of support and resistance here. The market was a resistance, then we became a support, and then we created a movement to the upside. We also acted as a previous support level here. So it's definitely a very nice key level from where we can hold the market to go to the upside. So when we came towards that level, look what we did. From here we started to have a pullback, market came down, we touched that level of 200 exponential moving average, but we never really went above our 50 EMA. We need to stay above both our exponential moving average if we want to buy. We were under our 50 exponential moving average, so market started to drop again. When we started to drop, we got rejected once from that level of resistance, this support and resistance level. We got rejected 2 times, and that is what we need. We need at least 2 rejections at this area. So when we got rejected, look what we did. We also went inside our both exponential moving average, and 50 EMA also crossed above 200 EMA. So it was a very nice trade signal for us. So anywhere you place your trade here, when 50 EMA went upside, then 200 EMA, market also made a movement inside both our exponential moving average. We have got rejected from that support and resistance level, and we have also made a very nice pullback. So anywhere we place our trade here, put our stop loss just below our 200 EMA, and our target at 20 pips will be a very nice trade opportunity as a starting right here. But if you have mastered it already, if you can make money every single day by using this strategy, then we can expect to hold longer and our target will be the higher high area. So I hope that you guys understand this strategy. It is a very simple one and you can use it every single day on every single pair, and I recommend using it on a 15-minute time frame. So if you want to understand it even better, I recommend that you watch this video a couple of times so you can understand it correctly. So this is it from this video. I hope you guys got a lot of value out of this video. If you did, please leave a like, hit the subscribe button and press the bell icon. Let me know in the comment section what do you think about this strategy, and I will see you guys in the next video. Thank you for watching.